makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London with the conversations that matter. France's economy unexpectedly shrinks in the third quarter while inflation eases. Traders now fully pricing in a cut in the ECB's deposit rate for April, much sooner than officials in Frankfurt have been suggesting. Meanwhile, in the Middle East, Israel and Hamas extend their truce just ahead of that key deadline as negotiations continue for the release of more hostages and prisoners. Meanwhile, former U.S. Secretary of State Henry Kissinger, who defined American foreign policy during the Cold War, has died. He was 100. Let's take a quick look at the European market story as well, because when we look at the markets map, you are seeing kind of broadly unchanged, despite the fact that you did see a rally in futures and the fact that we are actually getting some contradicting signs of a slowdown. The idea that even though the market perhaps is pushing the rally higher, you have the contradictory force in terms of the economic data, the surprise economic data that came out of France. Net, you're starting to see underperformance, specifically in the UK index. FTSE down about 0.3%. The rest of Europe virtually unchanged, hence the gray on the screen. But it really comes down to the bond market at the core of the story, and that's where I want to go next. In the last 30 days or so, you look at the 30-year, the last kind of month, you have to look at the drop, and that's what this chart I'm going to show you actually tells. The idea that the drop in the 30-year has actually been the biggest going back not just several months, but several years. I mean, take a look at it all the way back down to 2011. You have not seen this kind of move, a 66 basis point move, we'll call it. What does that mean in terms of the broader bond performance? Well, let me show you. In the last 15 years, you have not had a month that has looked this good for the bond market. Again, you can see it is the best month. It really speaks to the idea that that move in yields is actually great for those bond bulls, but perhaps not so great for a Federal Reserve and other central banks around the world that are actually waiting for that some sort of market to do perhaps a little bit of the work for it. If the market is pricing in cuts, then they're not going to be that willing to hike or slow down their hiking simply because they have to counteract that stimulus that's coming from the markets. The problem is a good chunk of the market is positioned at the front end of the curve. And here's one example. Hedge funds in particular, their treasury shorts are at a record. This is in particular, I mean, of course, we have all of them kind of lined up here, but you can see that on the far end, you have not seen this kind of positioning in a very, very long time. Simply the idea that if everyone in the markets is positioned on the front end of the curve, they're actually creating a really hard time for the Federal Reserve because it means the Federal Reserve's policy works at a lag, whereas the market's policy has a more clear read-through. And if you start to see more pressure on the front end of the curve, again, the markets seem to be perhaps more in control than the Federal Reserve. At least that's going to be the question for a lot of market participants and economists. Right now, the smart money, however, positioned against the market, broader market pricing of stimulative cuts, instead saying that the higher for longer narrative is going to last, again, for longer. Now, that's just one of the dynamics that the markets are kind of working with. The other is the geopolitics, and that's where I want to go next. Israel and Hamas have agreed to extend their truce for at least another day, allowing for the release of more hostages held by the militant group in Gaza. Joining us now for more is Bloomberg's Lisa Flesher. Lisa, a last-minute deal, another extension. What do we get out of these additional 24 hours?
Well, we get time without hostilities resuming, and I think that's the most important thing for the civilians on the ground right now. And we also get more time to figure out what will happen with the remaining hostages. I mean, the truce was extended basically last minute, like 5 minutes before the 7 a.m. deadline. And from what we understand, you know, Israel and Hamas through Egypt, the U.S. and Qatar, were talking way into the night to figure out how to get this done. And the U.S. is putting immense pressure on Israel to keep the talks going, while Egypt and Qatar are pressuring Hamas to do the same.
And at the same time, we have, of course, a lot of regional leaders perhaps putting pressure on this. There was a great story of the last 48 hours or so of how Saudi Arabia is working with Iran to kind of counteract some of the forces you're seeing in Israel and Hamas. Of course, the United States, a part of that conversation as well, specifically Antony Blinken. What do we get out of that visit?
I mean, basically what you have is you have people, leaders like in Saudi Arabia and in the U.S. trying to keep things as calm as possible. Iran, through its proxies, Saudi is basically telling Iran to please try to keep things calm, and we have some incentives for you for your economy, which is not doing so well right now. And on the other side, you know, the U.S. is, with Blinken coming for the third time, is trying to put pressure on Israel that when hostilities do resume, you have a more targeted, focused, you know, seeking out of Hamas leaders. I don't think anybody expects there to be an event like a never-ending ceasefire. But what you have right now is you have all these people who have moved from the north part of Gaza to the south. And what you have is a humanitarian crisis right now, and people are trying to prevent it from becoming a humanitarian catastrophe.
Certainly something we're keeping a very, very close eye on. Of course, the humanitarian situation there, as you point out, becoming more and more dire by the minute. Bloomberg Lisa Flesher, we thank you so much for bringing us that crucial analysis and context. Now, coming up on the program, we make a pivot from geopolitics to what's going on in the tech space. We hear from the Robinhood CEO, Vlad Telev, as launches commission-free trading of U.S. stocks right here in the United Kingdom. That conversation next. This is Bloomberg.
Well, our core team remains intact, and it's very important, right? So we have a strong expertise of core team. But at the same time, we continue to make investments into intellectual human talent, which is very important for our industry because the industry evolves so quickly, right? Things are evolving, new developments come up by the day, but we continue to enhance our bench strength, continue to invest in our talent pool, continue to invest heavily into our compliance program. And I'm very confident that we'll continue to grow from strength to strength.
The new Binance CEO, Richard Tang, there discussing the future of his new team after the $4.3 billion settlement with the DOJ that forced its co-founder, Changpeng Zhao, to step down. Now, Robinhood is making its international debut, launching commission-free stock trading in the United Kingdom. The Silicon Valley firm has started rolling out trading of more than 6,000 U.S.-listed stocks and other securities to British retail investors. CEO Vlad Telev spoke to Bloomberg's Tom McKenzie.
What we're launching is commission-free share trading of U.S. stocks, and we're also launching 24-hour trading, which is a unique proposition. We launched a product in the U.S. earlier this year called 24-Hour Market, which was the first, we became the first major broker to allow round-the-clock trading of individual stocks. I think that's particularly useful for consumers here because there's just less overlap between waking hours and U.S. East Coast working hours. So that'll just make it a lot more usable and a lot more welcoming for customers to invest here. We are also launching 5% AER on uninvested cash. So the intention is for the UK market, Robinhood to be the best place to invest in US stocks and US dollars. And we believe we can fill that need better than anyone else.
I just want to push you a bit on the market opportunity. What are the kind of numbers that you're targeting by the end of next year, for example, out of the UK, in terms of customer acquisitions, in terms of total numbers or volumes? What are you looking at? Are the targets?
I mean, the way we think about it is this is a long-term opportunity for us. We've spent time building the platform, a technology platform that'll allow us to expand internationally as a software company. Every time we build new things in the U.S., they'll accrue to customers in the UK, 24-hour market being a prime example, along with the high-yield offering. So that this product that we're launching now is probably the best version of Robinhood, and we intend for it to keep improving. And since we are expanding as a technology company and we're building all of this in-house organically, the actual cost of making the platform available in each market should continue to decline, and we'll be able to get more leverage as a result. So I think over the long run, we intend to do quite well, and I'm thinking about it less in terms of like what are the targets in the next couple of months or even 1 year. But I think I aspire for Robinhood to be a global company. That's been the plan from the very beginning.
You mentioned the fact you're a decade old. 2013 was when you were founded. Why is it taking a decade to break into the UK market, Vlad?
I mean, I think the the reality of it is the U.S. is so big and there's so much to build that it's always sort of a tricky proposition. What do you prioritize? And we were about to launch in the UK a couple of years ago. It was March of 2020. And then we had a little bit of a curveball, didn't we, with a global pandemic. And at the time, we didn't know exactly how things were going to shake out, how long it was going to last, how disruptive it would be to the economy. But what we did see was basically a tripling of activity in Robinhood within a very short amount of time. So we had to make the difficult decision to postpone this launch because we were putting in all of the resources we possibly could to dealing with the surge in demand and making sure our infrastructure was scaling in the way we needed. And we made those changes, made those improvements, invested dramatically in the service quality, the infrastructure offering. Now we're in a much stronger place to actually serve the market with not just a better product with all the new features I mentioned, but also much stronger infrastructure.
Robinhood CEO Vlad Tenev there speaking to Bloomberg's Tom McKenzie. I want to get to some of the other top stories from around the world today. U.S. federal prosecutors have accused Nikhil Gupta, an Indian government agent, of directing a thwarted plot to assassinate a Sikh separatist with American citizenship in New York. And the allegations add to claims denied by India that it's waging a campaign to target Sikh activists overseas. They also mirror a killing in Canada and risk inflaming already delicate U.S.-India ties. Meanwhile, more in the tech space, if you will, believe Elon Musk saying advertisers boycotting the social media platform X, formerly known as Twitter, could lead to the death of the social media company altogether. He says companies pulling out are, quote, trying to blackmail him. Musk also apologized for endorsing an anti-Semitic post on the platform earlier this month, calling it, quote, the worst and dumbest thing he's ever done. The comments there made at the New York Times Dealbook Summit. Now, Sam Altman has been officially reinstated as CEO of OpenAI, the startup saying Microsoft is now a non-voting observer on its new board of directors. The announcement comes 2 weeks after Altman's initial ousting, with Microsoft being the ChatGPT maker's largest investor, holding a 49% stake in the company. Now, coming up on the program, Michael Lewis, the CEO of Uniper, joins to discuss the future of Europe's energy market and just what's at stake. Stick with us. This is Bloomberg. Russia's invasion of Ukraine took gas supply off the market almost overnight. Nearly 2 years later, and Europe still struggling with energy security. Germany, of course, at the center of this story, just given its former reliance on cheap Russian gas. Oliver Crook, our correspondent in Berlin, following the story very, very closely, joining us now in Berlin with a guest. Ollie?
That's right. And at the very center of this story, Kriti, is a company called Uniper, which was once upon a time synonymous with things like Nord Stream and all of the Russian gas that came in really straight to the households here in Germany, but also the industrial sector. And if the war caused a crisis in Germany, it proved existential for Uniper. It was one of the biggest government rescue packages in German corporate history. And now from the ashes, a new business was born. And at the helm of that new business, a new CEO. That is Michael Lewis. He joins us now here in Berlin. So, Michael, we've given a sort of very quick summary for what has happened over the last sort of 2 years. It has been really a massive story. And this rebirth really began on the shores of Wilhelmshaven about a year ago with the first LNG shipments coming into Germany. Where are we on this journey?
Well, as you said, Oliver, it's been an enormous challenge for Uniper and for Uniper's people. And kudos to all of our staff who's really done a great job in managing the company through these incredibly turbulent times. As you said, the fundamental problem Uniper had was the fact that the Russian gas was no longer flowing, and we were the counterparty to many of those long-term gas contracts. That meant that we no longer had the gas to sell to our customers. It meant that gas prices spiked, and it meant Uniper had a very serious financial problem, and the government stepped in. Since then, we've announced a new strategy, and we've also managed the risks in the portfolio coming out of that reduction in Russian gas flows. So we've managed to hedge all of the gas. So we've stabilized the company financially. And now we're rebuilding, and we're rebuilding a company which faces into the energy transition, which will create a company that is green and flexible and will deliver the flexible generation and the flexible green gases that are needed for the energy transition.
And a huge part of that, of course, and this is a huge priority for the German government, with a lot of this money that has now been pulled off of the table in this court ruling. Do you think that this threatens the energy transition in Germany? How does this impact that process?
Well, I think short term, clearly it's a challenge, and it's a challenge the government is now addressing. But if you look at the fundamentals and the long-term perspective, it doesn't really change anything. We know we have to get off fossil fuels. We know we have to massively reduce CO2 emissions and get climate neutral by 2045 in Germany. And that means a number of policies have to be implemented to deliver that. Most importantly, in the short term, we've got the challenge of the so-called Kraftwerk strategy, where we have to build around 25 to 30 gigawatts of new gas-fired capacity, some of which will be immediately hydrogen ready, some of which will be convertible to hydrogen or other green gases. I don't think those policies are fundamentally affected, but clearly the government has...
Does it affect any of your projects right now?
Not right now, but of course we're analysing the situation very carefully. Our strategy is founded upon the necessity to convert our fossil fuel-fired capacity, and we have a very large amount of coal in the portfolio. We will be closing that coal-fired capacity, and it's not just in Germany, it's across Europe. We will be closing that capacity, replacing it with flexible green generation. And that, in the short term, of course, needs government policy to implement the necessary markets.
And on that government policy, you have a sort of global perspective on this energy transition. Who is doing the best job as a government to attract this and make this happen?
I wouldn't say there's any specific government. What I'd say is there are good policy practices in different government areas. For instance, if you look at the UK, they've been very successful with the so-called contract for differences policy to encourage offshore wind. They've also had a very effective capacity market in power. And Germany can learn from both of those things, with a capacity market which successfully works in the UK to replace coal with flexible generation, and a CFD mechanism which we think would be useful for converting gas storage into green gas storage.
And then in terms of the company itself, is this a company that can stand on its own 2 feet? Is this a moment the German government came to rescue Uniper? Now the German government is in crisis, needs funding. Is this a good time to think about selling that stake and getting that funding into the German government?
Well, the German government has to sell the stake anyway. By the end of 2028, according to the EU Commission, they have to sell down to 25% plus one share. That was a condition of the state aid. Of course, our job as management is to make sure that the company is in a robust financial position.
Is it ready to go?
Well, we have a clear strategy. We have an excellent financial position. This year, we've stabilised the balance sheet. We'll have an excellent financial result. So we're very confident that the company is now in a far better position than it was a year ago. But there are a number of things that need to be done before any sale can take place. But in the end, that's a choice the German government has to make. We as management, our job is to define the strategy and execute it.
But it's your job to tell them whether or not it's an advisable and a good moment to do so.
Indeed. And what we're saying is we have a coherent strategy. We're starting to deliver it, and we're demonstrating that we are financially stable and becoming an environmentally sustainable company.
And I want to talk about the gas market a little bit more broadly. Gas demand is not back to where it was anywhere close, and gas pricing is the big unknown. What is the reasonable gas price for this new post-Nord Stream, post-Russian world here in Europe and Germany?
Well, as you said, it's very, very difficult to judge. What I would say is the gas price today is roughly double what it was before the crisis. Of course, it's much, much lower than it was at the height of the crisis last year. So we're now looking at around 50 euros a megawatt hour. It was around about 20 pre-crisis, up to over 200 in the middle of the crisis. So I think the most important thing is we are still in a challenging situation. You can't take 40% of European gas supply out of the supply curve and not expect to have an effect. We have reacted very quickly, and we've done a number of things which have improved that situation. We have full storage, and our storage at Uniper is also full. We've built new regas capacity like Wilhelmshaven, which we built in super quick time last year. And we have reduced gas demand. But there's no doubt about it, until significantly more LNG volumes come onto the market, there is going to be a tight situation.
And on that point of LNG volumes, you have Shell, Eni, and some of these other companies who have signed nearly 30-year contracts with Qatar. No one in Germany has done that. No one is more sensitive to the spot market and its risks than perhaps you and Germany. Are you intending to sign those kinds of deals with the Qataris?
Well, the challenge we have at the moment is, of course, is the uncertainty, long-term uncertainty over gas demand, because our ultimate aim is to get off gas and move to the hydrogen economy, probably starting with blue hydrogen, then moving to green hydrogen. So And as we electrify the economy, as we electrify heating, for instance, gas demand will peak in the 2030s and then start to fall. So we have to make judgments about what the right contractual position should be, what the right indexation should be. We're making those judgments all the time, and we have signed some gas contracts, and we still do have long-term contracts in our portfolio which are LNG. But we're constantly assessing this balance between supply and demand and how much long-term gas versus gas purchases on the wholesale market versus green gas we have in our portfolio.
Right. Well, Michael Lewis, the CEO of Uniper, thank you so much for joining us. Not enough time to get through all of the things, that everything that's happened over the last 2 years, but that's me in Berlin. Back to you, Creedy.
Thank you.
Bloomberg's Oliver Crook there alongside the Uniper CEO Michael Lewis. We thank you as always for bringing us that crucial conversation. In the meantime, plenty of more exclusive conversations ahead on Bloomberg Television. UniCredit CEO Andrea Orcel speaking to Bloomberg's Francine Lacqua about some of the other challenges in Europe. It doesn't just stick to energy, banking also in the fold. We'll bring that to you next. This is Bloomberg. France's economy unexpectedly shrinks in the third quarter while inflation eases. Traders now fully pricing a cut in the ECB's deposit rate for April, much sooner than officials in Frankfurt had been suggesting. Meanwhile, in the Middle East, Israel and Hamas extend their truce just ahead of a deadline as negotiations continue for the release of more hostages and prisoners. Meanwhile, former U.S. Secretary of State Henry Kissinger, who defined American foreign policy during the Cold War, has died at the age of 100. And the conversations that matter and the insights you need, this is The Pulse. I'm Creedy Gupta in London. Look, in the last couple of minutes, we've gotten some breaking headlines here, some commentary coming out of the ECB. First off, traders fully pricing in 25 basis points of a rate cut in April for the first time. It looks like they're trying to kind of make that official through some of those swap rates. At the same time, you have a headline coming out of the ECB that they're going to be pausing those PEP reinvestments just between December 20th and January 1st, citing that low liquidity. No surprise there, just given the holiday season. That's a pretty normal thing to do, but again, will affect, broader liquidity supplied by the ECB. So that's going to be something we watch. In addition to the read-through, by the way, from the ECB into the broader European banking sector, Andrea Orcel says his ultimate ambition is to make UniCredit, one of Europe's leading banks, a bigger piece of the conversation. Orcel set on transforming the lender and European banking altogether. He spoke exclusively to Bloomberg's Francine Lacqua. She began by asking him about his journey as head of the company.
I expected a lot, and I think I was probably more positive than most. But what came to pass, much more than I expected. This was a bank that have lost confidence in itself, have lost its external credibility, that very few, if any, thought could be turned around. And it did. And I think that for me it was like a call to arms, because when I see something that is that people tell me it's impossible, too many challenges, it's broken, I see possible opportunity, potential. So the first part was just convincing everybody that that was possible. And we did do it from day one. Actually, we did do it from before day one. Before I joined, I started talking to people. And we started articulating a vision for the bank, a strategy, a plan. We gelled everybody around principles, culture, and we started trusting and working with each other a lot. And you can see that in 2 years, the transformation from an industrial standpoint, block by block, we recomposed something completely different. And we've done that while delivering financial results. That eventually brought back confidence of the people internally, credibility for the organization outside, and I think a lot of momentum going in the next few years.
So are you happy with the share price now? I mean, you've given a lot back also to shareholders. You're kind of, raised as one of the successes in European banking right now.
Well, what I focus on is delivery. And I think if I look at the transformation of a bank and what we have achieved, redefining the model, redefining what we stand for, who we are, delivering the financial part of it, which is result. We almost multiplied our previous run rate by 4 times. And Our profitability is one of the highest in Europe. Our operational efficiency, one of the highest. Capital efficiency, one of the highest. We're growing. And we've done all of that while continuing to build lines of defense for the future, continuing to invest. So I cannot not be happy. And I think I take the opportunity for thanking the people at UniCredit because they put all their heart into it and have done much more than I ever expected. Share price will follow.
You've also had to cut a lot of jobs. I mean, I think around 10,000 overall. How's morale?
Well, look, I think we needed a change. If you look at where UniCredit was when we started, we were considered the laggard of Europe in the sector. So a change was needed, and when you go through this extent of transformation, there are some decisions that are disruptive. So yes, we reduce costs, we improve efficiency, but firstly, it was necessary. And I think it wouldn't have been fair to the people at UniCredit or the people that work with UniCredit had we not done what we have done. Secondly, our efficiency measures were a way to unleash or deblock or unlock the organization. We were very, very heavy at the center, heavy bureaucracy, heavy administration, completely labyrinthian processes, an organization that did not know how to work with each other. And we had constrained all the commercial activity and all the client-facing activity. And we had the arrogance to drive from top down how we should do things. And what we did was to flip the entire model, put the client truly at the center, use the points of contact with the client to tell us what the client needed, and then go up the organization and reorganize ourselves in a way that we could be faster, more effective, and most importantly, empower the people close to the decision, albeit within a framework, but they can take the choices.
You also have a lot of cash, actually, that you could use for acquisitions or maybe something transformational. How will you use that cash?
If you look at our strategy, it's easy to see what fits and what doesn't fit. I doubt that if we ever did an acquisition, somebody would look at us and say,
that's weird.
That's weird. Yeah. So the question is, does it fit from a value creation standpoint? And it's not only about numbers. If you do the wrong acquisition and it doesn't add value, what we feel we're working for three stakeholders, our investors will not make the value that they think they should get. Our people will fail in the integration because we cannot deliver what we want, and our clients are going to be in the middle. So the bottom line is, if it's not the right terms, if it's not the right way, it's better not to do it, and we still have a ton more to do. It is true, however, Francine, that yes, we do have the cash, and yes, now more than ever, we know what we can do. We've shown it on ourselves, and if we were to do something, we are extremely confident that we can extract the value from it.
What size acquisition are we talking about? I mean, could this be a big cross-border?
Look, I think for us what counts is reinforcing where we are. This is still a phase where we have plenty to do in the markets where we are. We never exclude anything. You never get what you want at the time you want it. But for us, what really counts is strengthening our market position, our client franchises, in certain way our factories. And most of the things we look at are within range with the usage of cash alone or very limited shares. But at the moment, as you said before, given that at least we believe that the valuation of our shares is well undervalued, cash is better than shares.
How big do you want UniCredit to become? Like, if I speak to you in 4 years, will it be just a different bank because of its size and footprint?
Well, I think big is risky because when you start putting big, you start thinking size over the quality and the value that you add. And therefore, I always try not to get there. But let's put it this way, Europe needs banks with market caps ahead of 100 billion. I mean, if we want this economic bloc to be an economic bloc that can hold vis-à-vis the US, vis-à-vis China, we need organizations that are bigger in scale, or we will not be able to propel it. So for everyone, I think for all my peers, etc., getting to a size that allows us to have a critical mass to support the economic growth is critical.
And would this also be countering Wall Street?
I think it's a different approach. I think if we look at Wall Street, they have models where obviously they mostly have their domestic market, which is enormous. And then they have global investment banks, global wealth management activities. I think Europe has lost that train, to be honest. Very difficult for us to keep up with, probably very few exceptions. I think for Europe what it is, or at least for us what it is Europe. So can we have organizations that can accompany the growth of Europe? In a way, and I tell that to my colleagues, it's a little bit responding, for us the dream is responding to Henry Kissinger question where they said, if I want to talk about Europe, who do I call? And we would like to be part of that call.
UniCredit CEO Andrea Orcel speaking exclusively with our very own Francine Lacqua there. Now, Bloomberg Business Week is also looking at how Orcel is set on transforming European banking amid the economic headwinds you are seeing right here on the continent. All you can do is read the latest, is type in MAG-GO on your Bloomberg terminal, or, of course, check in on Bloomberg.com. Now, I want to bring you some breaking headlines here that we are getting from Turk Telecom. This is, of course, the massive telecom giant over in Turkey as well. And they're actually saying a couple of things here. It looks like the minister, the nation's transportation minister of Turkey, is basically saying their main operating license for Turk Telecom is looking to get renewed. They're renewing the concession in 2024. They're saying will probably be happening for about 25 years. From a shareholder perspective, this was an uncertainty that was weighing largely on the shares. Now it looks like the current license set to expire in February 2026, which of course will get pushed out another 25 years. It's going to basically help the sovereign wealth fund in terms of raising Turk Telecom's market cap after it's largely fallen behind some of its competitors. It could also be followed by some sort of secondary public offering or a direct stake sale. That all, of course, according to Bloomberg reporting. We will keep you apprised of the share move, but for now, you are seeing those shares higher by 3%. They were down by almost 1% earlier in the session. Now, coming up on the program, COP28 starts today. We will look at the top discussion points at the summit, including climate financing and progress on the Paris Agreement's goals. That conversation next. This is Bloomberg. Conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. I want to bring you a quick correction from a story that we brought you earlier. Federal prosecutors have accused an Indian government agent of directing a thwarted plot to assassinate a Sikh separatist with U.S. citizenship. Nikhil Gupta has been accused of working with the Indian government, but is not a government agent himself. As we had said earlier, the Indian government denies being involved. Now, in addition to some of the other top stories that we are watching, I want to bring you the latest out of the Middle East, and specifically on OPEC. As oil is gaining, traders counting down to what we get out of that meeting. Saudi Arabia pressing members to join in to restrain output, but still facing pushback from nations including Angola and Nigeria. Bloomberg's James Heron here having the latest in London. James, what can we expect from today's meeting? Walk us through it.
As you said, the Saudis are pushing for a wider cut, a deeper cut from other members of OPEC because prices have dropped a lot. They're down about 13% from their September peak, and going into next year, the market demand is looking a bit weaker. So they really want to get a result today that can support those prices. There's a difficulty with Angola. There's a country that is resisting a change to its production quotas. So what we want to see from the meeting today is whether they can overcome these differences, whether they can make an agreement, and the impact that's going to have on prices.
How much of an impact is going to have on prices? We talked about Angola and Nigeria, for example, which haven't been making the quotas anyway. So if you tweak what all supply that hasn't really even been put on the market, is there any upside to prices here on these production cuts?
That's a very good question. And a big part of it is really already priced in, which is the extension of this 1 million barrel a day voluntary cut the Saudis have been making. I think people expect that to happen. So if there is anything extra, it's a question of, are they real cuts? And earlier today we had Amrita Sen on saying that if they were to announce, say, 1 million barrels a day, maybe it would only be half that in reality because some countries are already pumping less than their targets anyway.
Right. And of course, Angola is a great example, but you have plenty on the African subcontinent as well, which I think almost puts so much more emphasis on the Saudi voluntary cuts as well. We'll see what comes out of that. Bloomberg's James Herron walking us through that crucial meeting for us as well. And not only the only crucial meeting happening in the Middle East right now, COP28 is another, has officially started as over 120 world leaders gather for the conference in Dubai. Top of the agenda will be, quote, a global stock take on progress towards the goals of the Paris Agreement. Joining me now live from our Dubai studio, our very own Jennifer Sabasaja. Jen, what does the progress actually look like?
Well, Kriti, it depends on who you speak with, but really what we've heard, and I spoke with the first chair, the co-chair actually of the Global Stocktake, Barbara Creasy, and the idea is that, yes, we know that we are behind in reducing emissions and even eliminating them in some areas, but what is the progress that we're actually seeing? And so the past few months have been spent talking to a lot of these countries and a lot of ministers about what it is, where they're at, and really what it looks like, any progress looks like going forward after 2024. And not just that, a number of delegates and leaders want to really decide on what climate finance looks like. Because, of course, we heard in 2009 there was a promise by developed countries to give $100 billion of climate finance to developing countries. The deadline for that passed in 2020. So now what does it look like? What does climate finance look like? And even moving forward, what does other financing look like from governments and from the public sector in order to help a lot of the global south that is struggling right now in terms of adaptation and mitigation?
What are some of the areas of division? Where is the kind of sticking points of this meeting?
Well, I would put climate finance at the top, and actually our team at BNEF agrees with that. They say that there could be some progress on climate finance, but really it's going to get down to the nitty-gritty details that are maybe going to be a lot of the divisions that we do see. It's unlikely that we're going to see any real progress on carbon markets or anything like that. But really, you know, the climate finance, I think, is going to be key to any sort of progress that we see. Last year, of course, the big breakthrough of the COP27 summit was establishing this loss and damage fund. But what hasn't been established is what the numbers actually look like, who is actually giving out the financing and who is receiving it. And so that is what we anticipate a lot of the discussions are going to be boiled down to. Whether or not they actually come to an agreement at the end of the summit is another question.
Certainly something we're going to be watching very, very closely. Bloomberg's Jennifer Sabasaja joining us from Dubai. Excuse me, I'm stumbling over my words here, but we, of course, appreciate you bringing us that full coverage. We will continue to bring that live conversation from the COP28 talks out of Dubai as throughout Bloomberg TV programming and radio, not only today and tomorrow, but throughout the rest of next week as well. So, again, something to really keep an eye out in terms of the market read-through. Something else I have my eye on in particular, going from energy to the tech space, is a $20 billion deal stuck in the crosshairs of European regulation. It started with the CMA and Microsoft Activision. It looks like it's continuing with the European Union on Adobe and Figma. Again, like I said, a $20 billion acquisition. And let me just walk you through why this is so crucial. Here's why you should care. Adobe has been, of course, a massive player in things like cloud creative suites, its programming, Illustrator, Photoshop, etc. And 75% of the revenue, as shown on our screen there, comes from really servicing some of the software to some of the major players. Think of the cloud players, your major publishers, etc. And now they're looking to acquire Figma, the relatively small company, but one that has been doubling for the past couple of years in size. Now, here's why this matters. It is a $20 billion deal, but within that deal is packaged an almost over $2 billion retention package for the CEO, Dylan Field, and some of the employees. Why do we care so much? Because the criticism of this deal has simply been that Adobe is trying to take out one of its major competitors. That is the question that a lot of these regulators have from the CMA, which is asking for a lot of these concessions to be made, including the European Union as well. And the problem here is that the big value add for Adobe would be to increase Figma, bring it a part of their kind of offering to a lot of these cloud players. But a lot of these regulators, specifically in Europe, are saying if you do that, you will eliminate the competition. If they do indeed have to make that change, then do we start to see that value add be as lucrative as perhaps it once was? Of course, on the news of that, the stock didn't perform so well as highlighted by the red story. That's just something that's on my mind. Of course, there's plenty more coming up on the show. We'll go as well to explore the life and legacy of former U.S. Secretary of State Henry Kissinger, who has died at the age of 100. Stick with us. This is Bloomberg. Henry Kissinger, the German-born American diplomat, has died. A child refugee who rose to U.S. Secretary of State under President Nixon, winning the praise for his role in opening China to the West and bringing about détente with the Soviet Union. Kissinger passed away at home in Connecticut yesterday, aged at 100.
Henry Kissinger rose to become Secretary of State during the Nixon and Ford administrations. Kissinger drove and defined American foreign policy during the 1970s with his strategies to end the Vietnam War, contain the USSR, and open China to the West.
America has never been true to itself unless it meant something beyond itself.
Born in Germany to a Jewish family in 1923, Kissinger fled with his family to New York just months before the start of the Holocaust. In 1943, he returned to Germany as part of the U.S. Army and stayed after the war, working in Army intelligence, tracking down former Nazis. Returning from Germany, Kissinger obtained his bachelor's and doctorate degrees from Harvard. He first entered public service as an advisor to New York governor and presidential candidate Nelson Rockefeller before joining the Nixon White House in 1968. Working closely with Nixon, Kissinger engineered the withdrawal from Vietnam by U.S. forces and pioneered a policy of détente with the USSR, leading to the signing of arms control agreements between the nations. Perhaps Kissinger's lasting legacy will be his work opening China to the West, which began with a secret trip to the country in 1971.
We knew very little about China, but they knew a lot about us. The Chinese negotiators had read everything I'd ever written.
His diplomacy led to the historic President Nixon summit with Mao Zedong in 1972. Despite these successes, Kissinger has remained a polarizing figure in American politics. His adherence to a policy of realpolitik engagement with communist countries and a secret bombing campaign in Cambodia while being awarded the Nobel Peace Prize opened him up to criticism from both sides of the aisle. Throughout the second half of his life, Kissinger continued to have an active presence in both policy and business, advising presidents and secretaries of state, starting his own consulting firm, and serving as a director on corporate boards. And he remained an important voice in global affairs, often warning of risks from conflict between the 21st century's two strongest superpowers.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I.
Prior to his death, Kissinger was the oldest living former U.S. cabinet member and the last surviving member of President Nixon's cabinet.
Henry Kissinger, their former U.S. Secretary of State, who defined Cold War foreign policy, of course, died at 100, leaving behind an enormous legacy for all those that follow in his footsteps. Up next, Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. This is Bloomberg.